And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
Well, it is that time. Welcome to The Real Investment Show, the Financial Fitness Edition. This morning, or maybe this evening, wherever you are. Thanks for joining us. I'm Jonathan Penn, Certified Financial Planner. Joining me today in the arena, Jonathan McCarty, CFP, CFA. Also holds the National Social Security Advisor Certificate. A lot of initials behind his name. You know what that means? He knows his stuff.
Hey, he has Jonathan. Too much free time on his hands.
Good morning, Jonathan.
Good morning,
How are you?
Doing well, thanks.
Sorry, so I'm not very good at yelling impersonations. You're not going to get any of those today for two reasons, because my voice just doesn't go that high anymore. And secondly, if I try, I'm going to creep you out. So, but if you want some dad jokes or some life stories, hey, I'm your guy. There's a lot for Jonathan to get in, for he and I to get into this morning. So far here, Dow futures markets are a little bit flat today. You know, Dow futures are down about 22, S&P's down just under 7. NASDAQ's down about 51, pre-market here. Yield on the 10-year hovering around 3.7, 3.78. I think today, Jonathan, markets are, kind of seeing what the PCE kind of, what does the economic data look like today, right?
Yep. I think there's going to be a lot of eyes on PCE. It is a broader measure of inflation facing consumers, in the marketplace. And specifically, we've got Fed Governor Michelle Bowman who's going to speak.
Yeah.
She's actually speaking around 1 o'clock today. She's one of the dissenters on the Fed's recent decision to cut rates by half a basis point. She actually argued for only a quarter basis point cut, saying that there's still further weakness that they'd like to see in the employment market. We've seen a little bit of loosening in the employment market, but not enough, in her opinion, according to her remarks. She's spoken twice this week already. So depending on what comes out in PCE, it might be a bit of a victory lap opportunity for Michelle. We'll see what she has to say around 1 p.m.
Yeah, no, so it's hard to believe, honestly. It's hard to believe there's only 2 more Fed meetings this year.
Yeah.
Right, you got early November, 6th and 7th, and then December, I think it's mid-December, December 17th, 18th. And, will the Fed... is there another rate cut in store here? Is there another 0.5% cut, or the fancy way they say it is 50 basis points?
Yeah.
Is that going to, is it going to be 50 basis points in November? Maybe it's a 25 basis point cut in November. Is it another 25 in December? So, we'll wait and see here.
Yeah.
But we'll have to see how the market kind of reacts to the data as it comes out here a little bit later today. But, we've been in such a, as of late, a high interest rate environment, and now the Fed's starting to lower rates, and that's a good thing for folks that are for borrowers, folks that are needing to use credit, need to use loans, what have you. But this reduction in rates is kind of posing a dilemma for those who are savers, right, and who have been enjoying risk-free yields. 5% or north of 5%, maybe 5.25%, depending on some money markets, it was 5.4%.
Yep.
Now you're starting to see those rates come down.
Yeah, it's about time to get off the sidelines. A lot of people have been sitting back and just kind of enjoying that high income that's being thrown off by money markets. But we're getting into a position now where we're starting to see changes overall economically that are going to warrant an update to your strategy. And if you wait too long, you might be behind the ball. Yeah,
so I was looking at Fidelity's money market fund at the end of August. It was it was paying just about a flat 5%, right? I looked at it this morning, before coming in here, and this morning the yield, the most current 7-day yield on that is 4.63.
Yeah.
So it's down about, what is that, 0.37, or the fancy way again, 37 basis points, since the end of last month. So you're starting to see your money market yields move a little quick. So, I know there are a lot of folks that you and I visit with on a regular basis, and I'm sure there's a lot of folks listening here where they still have, a good chunk of, money or money set off to the side. Maybe they're looking for, maybe that money is earmarked for a specific purpose. Maybe it's, a real estate purchase and they want to buy some land, or it's a vehicle purchase, or maybe it's just part of their overall working savings.
Yeah.
So, I think there's a case there, depending upon what your liquidity needs are. Does it make sense to, maybe start looking at some, short-term certificates of deposit, maybe some short-term treasuries going out a couple years, where they can maybe lock in some yields now for a little bit higher for longer in case, they continue to see their money market yield continue to slide. What do you think?
Yeah, I would agree. I mean, a lot of people are still in the mindset of, well, let's sit and collect these rates for as long as we can. But unfortunately, when you start to see the economic data coming out to support that it's time to make that shift, you're already a little bit too late. So, like we stress for clients, it's important to be proactive in your changes to allocation strategies, not reactive. That tends to cost you a little bit on the back end.
Yeah, and I know when you look out a little bit farther on the yield curve right now, let's say if you look at where your money market rate is right now, and then you look at where, let's say, a 3-month treasury, a 6-month treasury, a 9-month, a 1 year, 18-month, maybe go out even to 2 or 3 years. You look at those yields out there, like 2 to 3 years out, and you go, God, well, I am getting more in my money market right now.
Yep.
Right.
Yeah.
But if you go out and you buy that treasury that's got a 2 or 3 year maturity on it, at least in 2 or 3 years, that rate might look pretty good. So it's kind of like Wayne Gretzky. It's not where the puck is now. You want to skate to where the puck is going to be.
That's right. Yeah. Yeah. Well, and if you consider, where the general consensus on interest rate movements is going, it's about a 60% expectation that we're going to see 75 basis points cut before the end of the year. So what that's going to mean, that 10-year, that 2-year that's floating a little over 4% becomes a lot more attractive when you consider that if they drop 75 basis points on the Fed funds rate, we could easily be in the 3% range by the end of the year, depending on how things shake out. Yeah.
So the Fed interest rates, what are they doing with rates? Are there, rate cuts coming here before the end of the year? That's on everybody's mind that I know that you and I are visiting with.
Yeah.
And there's something else going on a little bit later this year too in November. It's called the election.
Yeah, imagine that.
Right. So what kind of questions are you getting? With the individuals and families that you're visiting with on a regular basis, what concerns or what questions are you hearing about the election right now?
Generally around how that's going to impact our strategy going forward. There's a lot of concerns about return to inflation. A lot of these priorities that are being put forth by both administrations, but more so by one administration. I'm not calling one out because we remain politically agnostic here. But there's a lot of spending being talked about, and that has the potential to bring back an inflationary environment. If you're giving out money left and right for people to buy new homes, or giving rebates or tax credits, that's going to cause inflationary pressure. Yeah.
So I think with the folks that I'm visiting with too, I think they're hoping that whatever the election decision is, whatever the outcome is, that the margin of victory for whichever party wins is so great that we don't get into another hanging Chad type of situation, right? So
worst case scenario, I think, would be a contested election. I think that would be horrible for the country overall.
Yeah, because as you know, markets don't like uncertainty, right? But at least, and so that's what everybody's trying to digest right now are, okay, well, if it's Harris that gets elected, what are the policies that she's talking about that can actually get implemented, right? But then if Trump is elected, well, that's a whole other different type of set of policies.
Right.
And, what do we need to start thinking about now as investors based upon what those, who gets elected in and how will that shape the market? How will it shape the economy? And what sort of adjustments do we need to make around a portfolio strategy as well, right?
Correct. Yeah.
So a little bit more about thoughts around the presidential election when we come back. Stick with us. We'll be right back with Jonathan McCarty, okay?
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show. Or just click on the show links at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And we're back. These are nice tunes this morning, Brent. Appreciate that. Of course, Brent Clanton in here with us this morning. I should say Brent Smooth Clanton. I just made him chuckle a little bit.
Smoothest voice on radio.
That's it. Making the sound and look a lot better than I really am. So I appreciate your magic over there, sir. Uh-oh, here comes the mic.
Yeah, well, you're the one on camera.
Well, if you want to put a different image up there for me and make the mouth move, that's good too. So whatever you want to do. No, I appreciate y'all. Hey everybody, thanks for tuning in this morning. If you're liking the show, if you're finding the information helpful, do us a favor and just hit that little like button on our YouTube channel. That really helps us out. Like. Hit it a couple times for us if you would. So, joining me here in what I like to say the arena this morning, Jonathan McCarty. And hey, before the break, we were talking a little bit about, there's this thing happening later this year, the presidential election.
In case you haven't heard.
In case you haven't heard. Yeah. And that seems to be a very common theme around the conversations that we're having with individuals and families as of late.
Yeah.
There's a study out there that says that actually so the conversations that we're having with folks, it's apparently 80% of individuals and families out there are concerned about the election and what the outcome means for their retirement.
That's right.
So how are you helping folks with kind of the emotional aspect of it, or how are you helping folks kind of navigate their thought process around this?
Yeah, absolutely. And within that study, half of respondents were worried about specifically the impact of the election on inflation. So clearly, inflation's still a big concern for most consumers. Consumer sentiment's down, right? Consumer spending is down. We're going to see those numbers come out a little bit later today and see what those new reports show. But trying to set that expectation that this is the ebb and flow of the market, right? There's always going to be some type of huge risk to the market that's being politicized in the news media. And myself, I've lived through 3 once-in-a-lifetime economic crashes. And
yeah.
John, I'm sure you've, not dating you here, but you've probably lived through more than I have.
What are you saying?
So yeah,
Man,
you're a young man, John.
Thank you.
But it's helping to manage those expectations, and that's one of the benefits of our active management strategy. I was speaking with a client yesterday, and he asked, how have you back tested your data and your strategy? And I said, well, we don't have the ability to back test our data because our strategies are constantly evolving depending on changes in market conditions and economic data that's coming out. So we don't, we're not algorithmic traders here, right? We're making these changes on the fly in response to data that we have and being more proactive in that adjustment.
Yeah, all great points. And so folks are concerned about, kind of the outcome of their retirement plan and inflation, just the cost of living. I mean, I know those are questions that we get about on a regular basis, but it's also interesting that from that same study, roughly 39% of those polled are also very concerned about potential changes to the tax code, right? Yep. And you do have the Tax Cuts and Jobs Act expiring at the end of 2025, so things will kind of reset, for lack of better words, going into 2026.
Yeah,
right?
And one thing I'm voting for, and this is largely symbolic, I imagine, but the House just advanced a bill to the floor to get rid of the WPO and the WEP and the GPO, right, the government pension offset, and the windfall elimination provision. So that would be a positive change in the tax code for a lot of individuals that we work with. Although it doesn't help with the solvency of Social Security.
Well, that's another concern that folks had. Roughly 31% of those were polled said they are concerned about the future state of Social Security and Medicare. And I know we talk a lot about Social Security. We talk a lot about the solvency of Social Security, and we talk a lot about Medicare too, kind of as Rich would say, the alphabet soup around Medicare, right? That can be very confusing. So, and these are all common themes that, Jonathan and I and all of us here, we kind of visit with and talk with folks on a regular basis. So, if somebody's concerned about, Social Security and it not being there, how do you typically respond to that type of question, Jonathan?
Tell them, welcome to the club.
That's very reassuring. Yeah, that's great.
I'm not overly confident that Social Security, at least in its current form, is going to exist when I retire. And I'm very honest with clients about that. I imagine that there's going to be some type of change either to funding sources or to benefits being paid out. There's a lot of talk about just seeing an across-the-board reduction in benefits. I've had clients recently ask me about that. If that is the route that they decide to go, I think it would be something that's gradually phased in. There'll likely be a cutoff for people who are near or somewhat near retirement age, because at the end of the day, if the government's going to make a significant policy change like that, they have to allow people ample time to prepare for that eventuality in their own retirement. I mean, if you change the benefit payouts for people who are retiring next year, well, they've already been planning to have that income source.
That's right.
So you're putting them at a significant disadvantage.
Agree. So kind of talking around the topic of interest rates in the Fed.
Yep.
The Fed's starting to lower rates. I know there are a number of folks that I visit with who have been sitting on some money on the sideline, waiting for the right opportunity to buy some real estate, right? Whether is it a vacation home, or maybe it's their first time home buyer.
Yep.
Or maybe they're wanting to buy some land, what have you, and they can't decide, should I just should I just lay out cash for this? Or now that rates are coming down, will mortgage rates also follow? Is this going to be a better time for me to take out a mortgage? Or if I'm in a home that has a relatively high mortgage rate, when should I refinance? So I guess the question is, the underlying theme to all this is, now that the Fed is starting to reduce interest rates, how does this relate and affect mortgage rates?
Yeah.
What are your thoughts there?
Yeah, I'm getting a lot of questions from clients around exactly that as well. And, people see this 50 basis point cut from the Fed and think, oh, this is immediately going to translate to a 50 basis point cut in mortgage rates. And that's not the way that mortgage rates are priced in.
Yeah.
There's a number of different things that impact mortgage rates, economic growth being one of them, inflation right there. So the same way that the long end of the yield curve is affected by numerous different factors aside from the Fed funds rate, mortgage rates are affected in the same way. So I think that right now, with where we see interest rates going, and generally speaking, mortgage rates do tend to follow the Fed funds rate, but they don't mirror it. So you're going to see continued decreases in the Fed funds rate. That's likely going to translate to continued decreases in the mortgage interest rates. Whether it's going to be basis point for basis point, probably not. But you're going to see that general trend continue as long as we see the economic data supporting it. So I'm actually in this boat myself. My wife and I are looking to maybe upsize into a bigger place. Growing family. So we're looking to get that space, but the timing is critical there. So I think that with where we see rates coming, I mean, you've got Fed governors that are coming out and saying there's a potential for 2% cut next year, right? We're not only counting the 75 basis points that they're maybe forecasting for this year, but another 2% by next year. So if you are on the fence looking at that, I would say, patience is a virtue when you're looking at something like a long-term investment as a mortgage or even a refinance.
Yeah, I mean, you look at where rates are on the 30-year.
Yep.
From about a year ago, they were up in that, mid-high
7.5 to 8.
Close to 8%.
Yeah.
Right. And right now, average, rate on a 30-year fixed is what, 6.2?
About 6, yeah.
So you've seen it come down by almost
Full 2 points.
Almost a full 2 points,
Right.
just from last year,
Yeah.
right? So, and you're so spot on when it comes around to the decision of buying a home, because there are so many factors you have to think about. Is this an area that you plan on staying in for a long period of time? Like, what is the length of time? Are you going to move? Right. And it's not just the mortgage. It's not the principal and interest that you have to think about.
Right.
It's everything else.
Yeah.
It's your homeowner's insurance, which, by the way, for all of you homeowners out there, you probably have noticed that your homeowner's insurance premiums aren't getting any cheaper.
Especially those in the middle of the hurricane in Florida and Georgia right now. And best of luck to everyone who's having to deal with that. But yeah, absolutely.
Yeah. So, hey, special shout out to the individuals and families that we currently serve out in Georgia, Florida. Hey, we're thinking about you this morning. So we're definitely thinking about you here. But yeah, so I mean, in states where you've got those, high risk states of tropical storms, weather related items. I mean, your homeowner's insurance premiums are going up. Maybe you live in a floodplain. Flood insurance isn't getting any cheaper.
Yeah.
So, and just home maintenance. I mean, my goodness, just being here in Houston this year with the inclement weather we've had.
Yeah.
After the storms and the hurricanes and the tornadoes, I've had to replant my yard 3 times this year.
Yep.
All the nurseries are doing great, but it's every time we have some inclement weather, I think I'm just going to switch my yard to gravel and cacti.
The desert approach.
Done. It's just man, I got to go buy more trees and bushes and all this stuff all over again and get out there and plant all this stuff. So all things that you got to think about when it comes to this.
And even considering, I saw an article recently that came out and said the average income needed to buy a home has come down. And while, yes, that's true, it's a little misleading because this is according to the article, it's come down for the first time in 3 years. Well, essentially what they're saying is we've started lowering mortgage interest rates for the first time in 3 years.
Right.
And that's really what they're saying. But if you look at it, the average median price of a home is going up. So, those headlines can be a little misleading. It's important not to get caught up in the media spin and to take an analytical approach when you're looking at the cost it's really going to be to get into that new home.
Yeah, I mean, so you look at, I know Redfin just did a study, and they were saying a median priced home in the U.S., is $433,000.
Yeah.
That's not a small amount of money.
That is not.
Right,
yeah.
For a quote-unquote median-sized home. Right. And I think that's, I think that is, I will tell you, the folks that I visit with that have been looking for, buying a home, whether it's their first-time home or they want to sell their home, look for something else, or they've been waiting for a piece of property, they are still very frustrated that the froth, these higher prices with real estate, they just really haven't worked themselves down yet.
Yeah. Well, and that medium price home, I mean, I don't know about your clients, but mine can't find anything in the 400 range that meets their needs. So it's more like 5 to 6.
Yeah. Well, so we're going to keep rolling here. So a little bit more about, what about a micro retirement? What is that? Is it like a micro brew? Not sure. We're going to talk about micro retirement when we come back. So stay with us. We'll be back in just a moment.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
So my kids know that I do radio, but they don't listen to it or anything. This guy sees me in the airport. So now my kids think, like, oh my gosh, my dad's really
famous.
He's famous, right? Yeah, it's awesome. He's famous.
The Real Investment Show podcast.
So we get in the car and we find a Red Robin. It's packed. We've been there maybe 5 minutes. He comes over to me. He's like, come on, I got you. Puts us in a private room at Red Robin.
You know you've made it when you're an A-lister at
Red Robin. Exactly.
At realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Welcome back to The Real Investment Show. Erica, love your comment in the chat this morning. Gravel is not good for wind. So I was thinking about having just a gravel yard with cacti in it. Erica says, gravel is not good for wind. You don't want to buy windows for next door. You know what? I didn't even think about that. That is such a great point. So I think I'm just going to have AstroTurf. Just fake grass it, right?
I want concrete everywhere.
Yeah, or just level concrete, just like the rest of Houston. So it'll just flood no matter what.
Blend in.
It'll just blend in, right? Great point. Hey, if y'all are, we really appreciate y'all tuning in, and thanks for being in the chat. Hey, if we're being helpful and you're liking the show so far, do us a favor, hit that like button for us. We'd really appreciate that. Hey, so before the break, as we were kind of teeing up this next session, and I was talking about micro retirement, and is that like a micro brew? To be clear on my point, on the micro brew, I was talking about brewed coffee. I know where everybody else's minds went, but I was talking about my passion of coffee. There's a lot of things in this life that I can give up. Coffee is not one of them. So just to be clear, the microbrew was for coffee. So,
I was thinking about our event at St. Arnold's Brewery coming up next month. So if you guys would like to join us, we'd love to have you out.
So now we're talking about another type of microbrew, right? Is that Oktoberfest, right?
It is.
It's hard to believe it's here.
It's coming.
It's going to be good. So let's talk about this concept around micro retirement and just kind of what this is. I visited with a gentleman earlier this week, and he's in his early 50s, but in between some job transition that he had previously in his career, he left one employer to start a job at a new employer. but he took an extended period of time in between to travel, to decompress, to relax, to recharge, also known as a micro-retirement.
Yeah.
What do you think about that?
Yeah, I mean, it's a growing trend, especially among younger generations, millennials in particular. And I myself actually did exactly this when I was 30. Took some time off and traveled a little bit. Got scuba diving certified. I think there's a concern that people are just working themselves into an early grave. And even if you decide to retire at 62, 65, are you really still in the condition where you can go and do some of those things that have been on your bucket list? I looked at it as if I'm in my 60s trying to learn to scuba dive, that might be my only scuba dive. So I wanted to get some travel in, and like you said, John, just a chance to decompress and take a break. And I think so much, especially in the United States, there's a very big focus on work and hustle culture, right? Hustle culture is the term among people in my demographic, and I think that now younger generations are starting to kind of revolt against that, and Gen Z specifically is being credited to bringing a little more of a work-life balance into the workforce. And I absolutely agree with that. And it was hugely beneficial for me. I did it once at 30 and again at 35. And, I was single at 30. And thankfully, my wife is incredibly gracious and still allowed me to do it at 35. Although by about the 5-month mark, she was getting a little cabin fever having to spend that much time with me.
It's like, hey, Jonathan, you going back to the office anytime soon? You heading out of the house today, honey? What's going on?
She'd start dropping little hints, leaving articles around about potential upswings in employment, things like that. So yeah, she's not a subtle woman.
Was it a Post-it note, and on it said, "Psst, go to work."
Yeah. Open the fridge. There's a post that says "Get a job."
Well, so it's interesting. So the American Psychological Association, they did a study and reported that the average stress level among folks in the workforce that are 18 to 34 is on a scale of 10. Their stress level is 6 out of 10.
I was going to say 11, but yeah, we'll go with 6.
All right, so you're saying what, 15?
Yeah.
Compared to those that are age 65 and older, who they reported that their stress levels were about 3.4, 3.5 out of 10. I can see some validity to that, but I can tell you there are many folks that are 60 years young, 65 years young, a little bit older than 65 years young. They are still stressed too.
Yeah.
It's just a different kind of stress, right?
Yeah, and I think that also goes back to just the different challenges that generations are facing. Right now, people right now in their 60s aren't really facing the same things that people in their 20s and 30s are facing. There's a lot of pressure around getting into the housing market now before you become priced out. And that's a big concern for a lot of my younger clients is if I don't get in now, going back to what we talked about earlier, when to buy a home, if I don't get in now, am I going to be priced out by 2 years from now?
Yeah. So something else to think about too. Let's talk about the younger generation a little bit. Then we'll flip to those who are a little bit more mature in their investing career, as I would say it. But with that younger generation, so if you decide to take an extended sabbatical, you're stepping away for, is it 3 months, 6 months, maybe it's a year, who knows, whatever that time is. What are some things that you need to think about, because you don't have that income stream coming in. You're not, putting that money into your 401k plan, Roth 401k, right? So you're not having that savings go in every month. So you are making the choice to forego that for that period of time. So, just from a planning standpoint, budgeting standpoint, what are some thoughts that you need to kind of consider around that?
Yeah, and a recent study on this micro-retirement trend even quoted that you're potentially sacrificing about $600,000 of retirement funds by doing this, even if it's something like a 6-month sabbatical. So it really emphasizes the importance on meeting with your financial advisor, making sure you have a plan in place of where you're going to be able to pull this income. Our director of financial planning, Craig Severin, does amazing things in ironing out income distribution options with your existing assets and appropriate capital drawdown strategies that are going to leave you still in the best position on the long term. So I think that it requires some planning, but it's definitely doable. There are things that you can look into as far as housing. Obviously, for those who are a little younger with families, that's a bit more challenging. You've got a much higher expense to cover. If you're still younger and maybe just married or still single, it's a much easier conversation. But the importance is making sure that you have something in place with your advisor, with your financial plan that allows you the comfort of knowing you're not blowing up your retirement by going in and pursuing these goals.
Yeah, so maybe if you're deciding to take a little bit of extended time now for some vacation, some downtime, re-energize, maybe mentally you have to say, well, maybe my quote unquote normal, whatever that is, retirement age, maybe you need to push that out a little bit more, right? Because you're going to kind of sacrifice and use that time to recharge, relax now. So maybe you're going to work a little bit longer. And I will tell you, the word retirement, it's so different for everybody.
Oh,
right?
absolutely.
And it's rare these days where somebody just says, hey, John, look, I'm going to retire at 64 years young or 65 years young and I'm done. Very rarely, the folks that we work with, at least, are they just going to call it quits and sit on the couch?
Yeah,
right. I mean, they are typically engaged in the workforce to some degree, or they're engaged in some community involvement.
Yeah,
whether if it's volunteer work, are there charities that they feel very strongly about, and now that's where they spend their time, or maybe with the career that they had that for 20 or 30 years. And the relationships that they have developed over that period of time, now maybe they're not earning W-2 income anymore, but maybe now they're consulting, working part-time.
The good old consultant gig. Yeah,
right?
Absolutely.
And so they're still working, quote unquote, and they still have some income coming in. It may not be what they were used to making, but they still have some income coming in. So they're not quite ready to fully rely on the withdrawals from their portfolio.
Well, there's also the social aspect of being in an office environment. And I don't know how many of your clients are in this situation, but I've got a number of clients who have retired, spent half a year and a half or so traveling, doing the things that they had on their list, and then realize they still need something to fill their day, and they miss that social connection of being in the workforce and having those types of relationships. So I've got a number of clients who have gone back to work on a part-time basis, or not even a part-time basis, going back full-time, but in a significantly reduced capacity at a different firm, a low stress, not to use the term, but a lazy girl job, right? And, something that's very low stress, they can just show up and be productive and still be a part of that community without having the normal stress and workload that comes with being a little later in your career.
Yeah, because I can't tell you how many times I get a phone call, and I'm going to pick on us men a little bit. It's usually us men after they quote unquote retire. It's usually about 9 months when I get a phone call. John, I'm bored. And I'm driving my wife crazy. She wants me out of the house. I've organized my garage 3 times. I've done all my flower beds.
Color coded.
Yeah, and I've got everything organized. And hey, my previous employer called me, and they may want me to work on some projects. And I'm entertaining the idea of kind of going back to do this kind of part-time, John. And then the question is, what do you think? And my answer is, go do it.
Yeah.
Right. Be active, be engaged, go, have that connection. That's, get back on the deadlines that you want to be on. If that's the sense of purpose, that's going to kind of, make you happy. And it's at that point, it's not so much about the income, but it's more around having that sense of purpose. And to your point, Jonathan, how are they filling up their time during the day?
That's right. Something to get you out of bed in the morning. You've got to find things to fill your day. So for some people, that is, philanthropic goals. That is, volunteering at local organizations, through their church, whatever that may be.
Yeah.
For other people, they want to feel that sense of productivity.
So a little while ago, you were talking a little bit about, Craig, our senior financial planner here, and some of the additional illustrations and reports that he can run about, spend down strategies.
Yep.
So let's, we talk a lot here about our active investment strategy and having a diversified approach, right, from an investment portfolio, active management perspective. But you also want to have a diversification of accounts.
Yes.
Right? Because how many folks do we visit with where they're great savers, but the only vehicle they've really had to use is their pre-tax 401k. And now that money is rolled, and now it's all sitting in what Rosso likes to say, the fatted calf, the traditional IRA, right? And every time money comes out of that traditional IRA, it's fully taxable.
Yeah.
So after the break, let's come back and let's talk a little bit about diversification of accounts and what an efficient withdrawal strategy might look like and what that means.
Yeah, that transition to retirement.
Yep. So we'll be back in just a moment, folks.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, we're back. Hey, thanks for sticking with us here at the Real Investment Show this morning. So in the last segment, we were talking a little bit about micro retirements, and we're getting all sorts of great chat in there about micro brews and micro strategies. And hey, it's 5 o'clock somewhere for some folks. Hey, more power to you. But Brent,
Yes.
So you were talking about what nano retirement? What's going on?
I have an announcement to make.
Okay.
I'm beginning my nano retirement tomorrow.
All right.
And I'll be back on Monday.
So we'll have your send-off party this afternoon, right?
Yes.
So we got to go get a cake. Happy nano retirement. And then we'll have like breakfast bagels or something when you come back in.
I like that.
You like that?
Let's do
the
it.
Nano retirement. I love it. So before the last break, we were talking a little bit about, diversification of accounts, right? And you want to have that savings mentality, and where are you putting your savings now? And you have to think about the future a little bit, right? You got, especially if let's say you're a younger saver, and you're putting money aside for those future retirement years, whatever that looks like. We've always been taught, at least, back when I was back in the day when I was starting in this business, hey, put your money in your pre-tax 401k. It's all pre-tax. Get your tax deduction right now, right? Well, now they've got, different savings vehicles, Roth 401k. I'll tell you, our oldest daughter, who graduated from college last year, she started her first official, post-college career, here in Houston about a year ago. And as she was looking at her retirement package and looking at her benefits, she's like, Dad, will you help me take a look at this? I said, yes. I said, you have a Roth 401k option. That is what you're going to do.
100%.
100%. She's going to be 24 in October. Hey, our youngest daughter, who is 22, she's in her senior year of college. When she gets out and gets her first, post-college career, guess what? All Roth.
Yep.
All Roth 401k, right? So it's as this money grows, as you get older, it's one thing to have a diversified investment portfolio, but you want to have this diversification of accounts.
Yep.
So that way, because there's so many folks that I work with, and they were great savers, but they didn't have these tools. They weren't available to them when they were saving. So all this money is in a traditional 401k. They roll it, which means they move it to their traditional IRA. then, when money's got to come out, whether if it's for a new air conditioner unit or, they got vehicle repair or whatever that is, it's taxable, 100% ordinary income tax, right?
Yeah. Well, and a lot of individuals, they also didn't have these options when their income was lower. So, to your daughter's point, and I don't know where she falls in the spectrum, but I imagine she'll be earning more later in life than she is now. So now's the great time to take that hit, pay the taxes due now, and secure that tax-free income later for life.
Agree. So talking about a little bit, so let's say you have this diversification of accounts. You've got money in pre-tax. Hey, let's say you've been able to get money into your Roth IRA. You've got money in a regular taxable brokerage account. So you've got these different buckets, right? Maybe you have a life insurance policy that has cash value built up in that you can borrow against from a tax-free standpoint if you're looking for liquidity. So you've got all these different moving pieces as you get older. You were talking about Craig a little bit earlier, right? I mean, we can look at all of these different accounts and figure out, okay, what is the withdrawal sequence? What's the right formula or recipe from a withdrawal strategy?
That's right.
To help you, look at, kind of smoothing out your tax efficiency over time.
That's right. Minimizing your total taxes paid, maximizing the dollars going into your pocket. Craig's a magician. He can do some great stuff.
Yeah. So kind of thinking about folks that are nearing retirement or they're in retirement, or I guess, some of this could even apply, Jonathan, to folks that are a little bit younger, starting in their career. It's hard to believe that we're going to be in the fourth quarter, right? I mean, October is right around the corner. So what are some kind of end of year things that we can be doing, some end of year checklist, to button up accounts, just kind of dot our I's, cross our T's, make sure we're not, overlooking something that could be kind of detrimental, right?
Yep. Yeah, a lot of things that I'm talking about with clients, John, Roth conversions, right? We're now at the end of the year. You've got a pretty good feel for what your income's going to be, unless you're one of those individuals that gets your bonus in December versus, the beginning part of next year. You can pretty much forecast what you expect your income to be. By this point, you've got a pretty good idea of where you're going to fall on capital gains and income generated from any taxable investments you have. So it's now time to start talking about that end of year tax planning, whether that's Roth conversions or that's tax loss harvesting. Those are the types of things that you want to be paying attention to.
Yeah, and for us that are maybe folks that are a little bit older, hey, if you're turning 73 years young this year, 'tis the season for required minimum distributions.
That's right.
There's a lot of confusion around this. So with a required minimum distribution, when in the year that you turn 73, that is the year where you need to start taking out what they call a required minimum distribution. Now, that required minimum distribution needs to be out by December 31st, right? Now, when you take your first required minimum distribution, so if I'm turning 73 this year, I actually have the option of delaying my first required minimum distribution. I don't actually need to take it up. I can wait up until April 1st of next year, 2025.
Kick that bucket.
Right? I can push that out. I can take the distribution next year rather than taking it in 2024. Is that a good idea?
Well, in a situation like what we see right now, we're forecasting hitting 6,000 by the end of the year. So it may be a good idea, but there is a caveat there. Yeah. You're then stuck with two distributions next year.
So when I take if I delay my required minimum distribution from 2024, I don't take it until 2025, that is income that is declared to me in 2025. So to your point, I've got to take two distributions next year, the one that I delayed for 2024 and the one for 2025. So now all of a sudden I may be doubling up on my income next year, and that'll have a ripple effect for things like, hey, how is your Social Security taxed?
Right.
What about those, IRMA charges on your Medicare premiums too,
correct.
Right?
Yeah.
So, and I know, so it's funny. So, about this time of the year, we're going through and we're reaching out to individuals and families who haven't taken their required minimum distribution yet to make sure it's on their radar screen.
Yep.
I can't tell you how many folks that I say, hey, Jonathan, your required minimum distribution needs to come out. Here's the amount. Well, I don't want to take that much. I don't need it. I don't need to spend all that. It's like, well, guess what? It still needs to come out.
It does, yeah.
Right? So if you miss it, or like if you don't take your required minimum distribution, what are the penalties or the excise taxes on that?
25%. I mean, thankfully, it's come down. It used to be 50%. So now it's only 25%. And, if you do miss the RMD and there are some extenuating circumstances, the IRS does have a dispute process to try and get around that 25% excise tax. And they require you to file that petition within a timely manner, which in government speak means 2 years. So, you've got plenty of time there. But I think that, careful planning around your RMD strategy is important for individuals who are concerned about moving up in IRMA brackets or the impact on taxability of their Social Security. Something like a QCD is a good option to consider. You can make a qualified charitable distribution from your 401k or your IRA that will satisfy that RMD, and it'll give you a little bit of goodwill in the community and a tax break.
Yeah, and so now, in order to take a qualified charitable distribution of that QCD, you need to be at least the magical age of 70 and a half.
That is correct.
Right, for 70 and a half. Your required minimum distributions, at least right now, for folks that are turning 73 this year, that's when they start. Now, you don't have to wait until 73 to start taking distributions from your traditional IRA. Maybe you did retire and your earned income is lower. Jonathan was talking a little bit about Roth conversions earlier. Sometimes a Roth conversion isn't for everybody. We have to kind of look at the numbers and see what makes sense.
Right.
Sometimes the answer is, hey, maybe you're 67 years young, 68 years young, 69 years young. Maybe a Roth conversion doesn't make sense numbers-wise, but you know what? Maybe you can start taking a little bit of money out of your traditional IRA now, pay the tax now, which will make those required minimum distributions a little bit more manageable when you do reach 73, or by that time, maybe the age for your required minimum distribution will be 75.
I'm pulling for 80 by the time I get there, John. I'm hoping.
You say 85? Yeah. Come on, give me 85. Give me 85. Give me the 85. So if you have any questions around required minimum distributions or need some help with this, hey, stop by our website, stop by realinvestmentadvice.com, reach out to us. We're always happy to be a sounding board and help you to help you look at this stuff. So some of the other kind of end of year items that we want to make sure we take a look at. Jonathan, I still to this day I cannot tell you how many times when I look at and review traditional IRAs, Roth IRAs, SEP IRAs, Simples, you name it, and folks fail to remember to add their beneficiary designations to those accounts.
Yeah. Or even update them. Say you've gone through a major life event, either someone has passed away or maybe you've recently experienced a divorce. You'd be surprised how many people leave ex-spouses on accounts that they just don't pay attention to.
Yeah, and why that's important is if you have a will, right, and you have a will in place to basically explain how you want your proper to be. My goodness, I think I need more of my microbrew.
What's in your microbrew there, John? Yeah.
Apparently, it's not strong enough this morning. But however you want your property passed, right, after you pass on to better places, your IRA beneficiary designations on your life insurance policies, designations on your annuities, anything that has like a beneficiary contract on it will supersede what you put in your will.
That's right.
Right. So if there's somebody on your IRA that shouldn't be there and you pass away, guess what?
They're getting that money.
They're getting the cash.
Yes, they are.
Right. So and so another point here, maybe you've moved your IRA or Roth IRA from one custodian to a different custodian, or maybe you've retired and you have moved your money from your 401k plan, 403b plan. You rolled it to your IRA. When accounts move, when money moves, your IRA beneficiaries don't come along with it. You got to remember whenever you open up an account at a new firm, you got to make sure you put that data in there.
Couldn't agree more, John.
Yeah. So we had so much more to get to.
It always happens that way, doesn't it?
And we just ran out of time. You know what? But we had fun. So thank you, everybody, for tuning in. If you have any questions, stop by our website, realinvestmentadvice.com. We always welcome your questions. We're here to help you. And hey, if you can, hit that like button for us. Thank you again for joining. Y'all have a great day.
Thanks, guys.